Welcome to Accounting Actuals. We simplify accounting and bring practical insights on the financial tools that every business needs. Ever wondered what kind of accounting KPIs successful seven-figure businesses are tracking? What separates these businesses from the rest isn't just how much money they make, it's how well they measure, manage, and respond to their financial data. In fact, we can even say that how well they track their KPIs has a direct correlation to how much money they make. Today, we're diving into the top accounting KPIs that seven-figure businesses live by and how you can start using them to scale your business too. Whether you're trying to build a scalable business or just make sense of your numbers, these are the same KPIs CFOs, controllers, and high-performing founders rely on every single month. Let's get into it. Part 1. Gross and net profit margin. Gross profit margin. This tells you how much you're actually keeping after direct costs of goods or services sold. For most seven-figure businesses, this margin is optimized constantly. Why? Because it shows how efficient your production or service delivery is. Think of it as an indicator of core efficiency, a signal for pricing strategy, and a benchmark for scaling. Net profit margin. This is your true bottom line. High-revenue companies track this religiously. It's not just about how much you make, it's how much you keep. Formula for net profit is net profit equals revenue minus all expenses, including COGS, operating expenses, interest, taxes, etc. Think of it as the final scoreboard because it shows how well you handle growth. Part 2. Days Sales Outstanding or DSO. How long does it take you to get paid? Big businesses don't let invoices sit unpaid for 60+ days. They track DSO to keep cash flow healthy. If your clients love you but pay you late, your business suffers. Seven-figure companies don't take collections lightly. Part 3. Operating cash flow. Revenue is vanity. Cash flow is reality. Healthy seven-figure businesses monitor cash flow weekly, not only monthly, because they know profit doesn't pay the bills, cash does. They look at cash inflows and outflows from 3 key activities. Operating activities, day-to-day business. Investing activities, asset purchases or sales. Financing activities, loans, investor funding, repayments. Part 4. Job cost accuracy or inventory turnover. For product-based and construction companies, this is everything. They measure how accurate their job costing is or how fast inventory turns. Seven-figure companies estimate job costs before they start and then compare actual costs to those estimates. Did this job actually cost what we expected it to? They don't guess. They forecast, track variances, and protect their margins. Part 5. Budget versus actual. First of all, a company should have a budget. That's not negotiable. And there's no exception to this, not even for seven-figure businesses. In fact, the bigger the business, the more essential budgeting becomes. A budget means nothing unless you measure performance against it. And budget versus actuals is how you keep your business agile, accountable, and on track. Part 6. Monthly recurring revenue, MRR, versus churn. For SaaS or subscription-based businesses, MRR is king. But smart companies don't stop there. They track churn just as closely. Churn refers to the percentage of customers or revenue lost during a given period. Why? Because it's 5 times more expensive to acquire a customer than to retain one. Bonus KPI, financial close time. Our personal favorite one is financial close time. How fast can you close your books each month? Seven-figure businesses aim for 5 to 10 days max. The faster you close, the faster you have the data to make decisions. Thank you so much for watching. For more information on how we can support your financial goals, be sure to check the details in the description below or visit our page.